Welcome back, folks, to Investor Diaries. Over the past few weeks, we are hearing a lot about the Chinese company Didi. Just days after Didi Global Inc., China's version of Uber, pulled off a $4.4 billion IPO in New York City, the Chinese cyberspace regulator effectively ordered it to be removed from the app stores. And it said that security risks are the main reasons why it is being ordered to be removed. Well, this ruling doesn't really stop the existing users from using Didi, but there won't be any new users till we hear further news. Now, reacting to all of this, the stock price has fallen down from $14.14 to close to 8.5 US dollars in the space of less than a month, after which it has IPO'd.
So now let's try to understand a little more about the company. So what is Didi? So as Appy mentioned, it is China's biggest ride-hailing company. So Didi squeezed Uber out of China about 5 years ago, buying out Uber's operations after an expensive price war. Its blockbuster IPO on June 30th was the second biggest in the US by a company in China after Alibaba. And the IPO estimated the market value of Didi to be about 68 billion. Accounting for stock options and restricted stock units, the company's diluted value exceeds $71 billion, well below the estimates of 100 billion. The relatively modest showings reflects that both investors increasing caution over pricey stocks as well as China's recent crackdown on its biggest tech plays, both of which had kind of led the valuation go down from 71 to 68 billion, leading to its IPO.
So, what is this investigation all about? Just 2 days after Didi IPO'd, the Cyberspace Administration of China said that it was starting a cybersecurity review of the company to prevent further data security risks. And in fact, it went as high as saying that it wants to safeguard national security and protect the public interest. People familiar with the matter, they say that the regulators had asked Didi as early as 3 months before to delay the IPO because of security concerns, but Didi did not listen and in fact went ahead for the IPO. Now, 2 days after the listing, regulators said that Didi had committed serious violations in the collection and usage of personal information and therefore ordered the app to be pulled from the Chinese app stores. There are no details on precisely what the investigation is going to be focused on, where or when the alleged violations occurred, and whether there will be any penalties to come. So the next few weeks or months in this case is going to be pretty interesting, and I do expect that the stock is going to be fairly volatile during the next few months.
Additionally, the Global Times, a Communist Party-backed newspaper, wrote in an editorial that Didi undoubtedly has the most detailed travel information on individuals amongst the big, large internet firms, and they appear to have the ability to conduct big data analysis of individual behaviors and habits. To protect personal data as well as national security, China must be stricter in its oversight of Didi's data integrity, given that it's listed in the US and its two largest shareholders are foreign companies.
So the big question is, did this happen all of a sudden, or were there warning signals before that? And the reality is that the regulator has been trying to work with Didi for quite some time now. In fact, in the month of May, China's antitrust regulator ordered Didi and 9 other leaders in on-demand transport to change their practices, rather overhaul their practices from arbitrary price hikes to unfair treatment of drivers. Actually, in November of last year, the authorities derailed the planned IPO of the fintech giant Ant Group, which is also backed by Jack Ma. And in April, actually, a fine of $2.8 billion was imposed to Alibaba after the antitrust probe found that it's abused its market dominance. Didi, however, has gone on record and said that it was unaware of China's decision to halt registrations and remove the app from the app stores before listing.
So now, why does this all matter? Why is Didi stock so important? Well, You really can't overstate how dominant Didi is in ride hailing in China, accounting for approximately 88% of total trips in the fourth quarter of 2020. When Didi bought Uber's Chinese operations in 2016, took a stake in the company, and that currently stands at about 12%. Didi's US IPO was shepherded by the who's who of Wall Street banks. Its largest shareholder is Japan's SoftBank Group with more than 20% stake, and other shareholders include Chinese social networking giant Tencent Holdings. However, due to Didi's ownership structure, its CEO Cheng Wei and President Jean Liu control more than 50% of its voting power.
So the big question here is what's going to happen now and in the next few months? On Didi specifically, the critical question is what does the review actually yield? What do the regulators actually find? And this is going to have a huge component into the fines that are going to be levied to the company, if at all. However, as far as the analysts are concerned, they're looking at a much wider impact. Key issues on what this is going to do to the ambition of other Chinese companies who want to be listed in USA. And whether this actually marks a new direction in China from a regulatory crackdown perspective. Although Didi has said that it plans to fully cooperate in the investigations, it's warned that the removal of the app, as far as the new users are concerned, is going to have a detrimental impact on the revenue of the company. And that's kind of understood because if you're not allowed to have new downloads in the App Store, you're not going to have new revenues. Rather, you'll be relying on existing users. So, what's the Investor Diary's recommendation out here? We firmly believe that at this point of time, Didi stock is too volatile for you to enter. Sure, you might actually argue that it's less than $9 and over a period of time we expect it to go up. However, this is not to say that the stock might not go down further. For all that matters, it might go down to $6 as well. So we recommend that you hold off on any plans to buy Didi stock at this point of time and look elsewhere.
So that's a wrap for this episode, guys. Please let us know your thoughts, comments on our overview or analysis of what's happening with Didi stock, and hope to see you in the next episode.